Today we're going to be looking at Qualcomm, ticker symbol QCOM, and is it still a buy in 2021? You can see it's currently at its all-time high, pretty much at $182 a share. I brought this stock back in March when it was 130, so that's gone up about 45% since then, so it's been great for any of you guys who was listening and bought it. The reason why we have Cathie Wood in the thumbnail is, funnily enough, this was one of the stocks she had in 2016, bought it around about $67 a share, and then held it for 2 years, and then sold it for about that same price again. But if we look over the last 5 years, you can see that since then, and especially since 2020, this stock has been on an absolute tear. So what we're going to do is look at the fundamentals of the stock, and then I'm going to give my fair value of the stock using discounted free cash flow and the Buffett-Graham intrinsic value, and we'll see if this is still a buy. But first, can you please give a like on the video? It really helps me out, and subscribe if you're not. I know I got a lot of new viewers. I'm bringing out stocks all the time, very interesting stocks. High gainers like this one, so please subscribe if you're not already, but let's head into it. So firstly, it has a $207 billion market cap. Its share price is at 182. The start of the year was $122 a share, and its all-time high on the intraday was 186. It pays a very nice 1.61% dividend, and the ex-dividend date is the 1st of December, so buy before then if you want that dividend. So firstly, is the PE ratio less than the market? Yes, it is. 26.7 to 28, so that is a pass. Is their revenue increasing? Yes, their revenue has gone from 22.7 billion to 33.5, so that is a pass there. The revenue is increasing. Is the profit increasing at the same rate? Even more so. It went from a negative company in 2018 with minus 5 billion, and it's now positive in the green with $9 billion. So that's excellent. And what are they doing with this money? Well, they're actually aggressively buying back their shares, gone from 1.4 billion to 1.1. So this is rewarding investors in two ways, and it's a sign, which is good in two ways, easy for me to say, is that firstly, they're rewarding shareholders by buying back their shares. If there was 10 shares of a company and you own one, then you own 10%. If the company then buys back 5 shares, there's now only 5 shares, you would own 20% of the company, so it's increasing your share. But also, they think their stock is undervalued, because if they didn't, they wouldn't be buying it back. Next, is the free cash flow increasing? Yes, it is. 3.1 million to 8.6. So that is 5 passes. Everything's increasing. Everything's looking good. So what does that mean overall? Well, as I said, 5 passes. Free cash flow ratio, 207 billion divided by 8.6. That gives you a free cash flow ratio of 24. Very similar to PE ratio. And the dividend is a 3 billion dividend, and very safe with a $6.8 billion in cash flow. Now, just touching upon that dividend, if we just go here, you can see that, as I said, 1.5% dividend, $2.72 annual dividend. Only a dividend increase over the last 2 years, but the reason for that is because 2019 here was flat, and so was 2018. So if we look quickly, you can see that this is the quarterly amounts paid. So it was flat for those 2 years, but they have actually been increasing for a lot longer. They were just flat for 2 years. So yes, dividend increase track record of only 2 years, but I think overall it has actually been higher. 3-year growth of 14%, payout ratio, as I said, of 34, and the next dividend payment is on the 16th. So as I said, buy before the 1st, get it on the 16th. Now let's head into the valuations of the company. So I've got a discounted free cash flow model here and a Buffett-Graham intrinsic value on there. So I've calculated the future free cash flows of the company. I still think this company is going to be growing despite the news with Apple. I think this company has a very bright future. And what we want to do here is we've calculated the future free cash flows. So what does that give us? A calculated stock price on discounted free cash flow? Well, it says it should have a value of around about $254.82. So that is a easy buy on discounted free cash flow. This company has been generating cash flow massively over the last few years and will be continuing based on what the analysts are saying. Next, we've got the Buffett-Graham intrinsic value. This is based on earnings per share growth and the AAA bond yield, and I imagine this will be good as well because of that expected growth rate, and that's actually even better. A fair value of almost $385 a share, and then a Graham price, which is, if you see it at this price, buy and hold forever, 288. So the calculated stock price and the Graham stock price are pretty close in line. So the models are saying that this is a buy. I mean, it was a buy at 130 with the 2020 earnings, and with that double free cash flow, I think this stock is just going from strength to strength, really. It's a great stock. So what we're going to do is quickly look at some of the technicals. Now, obviously, this is based on a massive increase, but what I want to do is see if we can get some value elsewhere, because this has had a massive increase over the last few days. But what is it doing? What can we see from the moving averages? So I'm going to add a 50-day in green. I'm going to add a 100-day in yellow. Let me just add that in there. And finally, I'm going to add a 200-day in the red, which is the shortest moving average. So, well, one thing we can see here is the price has massively increased over 3 major moving averages. What was the reason? What could you have done to do this? Well, the price crossed across all those major moving averages, which is obviously a bullish signal. And even now, the 50-day has crossed the 200-day and the 100-day. So that still is actually very bullish signals. If we go to the past, you can see that the 200-day has held pretty consistently the entire time, dropped below the pandemic. That's a buy signal. There was buy signals here and buy signals there. If it ever drops below that 200-day, then you know it's a pretty good investment and a pretty good time to buy, because when it has done so, it's powered through and made pretty crazy moves since then. Next, we want to look at, what I'm going to do is I'm going to look at the RSI actually next. The reason for that is because this stock is currently in massively overbought regions, because it's, well, you can see there it's overbought regions, that's all-time high. But what I want to draw attention to is when the stock is in the oversold regions, that is a buying signal. So you can see here when it has been in the oversold region, the price has jumped up pretty quickly. And here it was below the 30% or 30 line, which it hasn't been since basically round about when Cathie sold it, actually. And then this stock would go on a pretty crazy run since then. So if you do see the stock in this oversold region, definitely a buy. But right now it's in all-time highs, which it hasn't really been since April of 19. And then it did have a pretty big drop off before rebounding back later in the year. So RSI, not really too keen on the stock, but I'd say the other technicals are looking very good. And finally, we'll just look at the MACD here. And let me just bring that up. So what is bullish about that? Well, firstly, if you were paying attention to this earlier and looking at the MACD, here was the signal line crossing and the histogram went there, and that would have been your buy signal, and you would have bought at 124 and you would sell at whenever you wanted to take your profit. The other big move here is the MACD and the signal line crossing 0, which was at 135, and then again on 132, and then one again at 135. There were your buy signal. So right now everything's looking bullish, the price movements are bullish, but if you were to get it at the signal line crossing here and here, then obviously you would have made crazy money as well. I would say hard to look at the technicals right now, but fundamentally the stock is pretty solid, although the technicals do say it's a buy, but the fundamentals definitely say it's a buy. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.